following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. And can I say that the S&Ps are up again? No, I can't. They're down 3 points. Let's write a big article on that. I'm just kidding, guys. It's amazing. By the way, on the scanner, just letting you know, we're switching over to this new build, and that's why I look a little stressed this morning. Been up all night working with the programmers on this. This new build is killer. I think you're going to love it. Awesome look and feel. So we've got the USA stocks on delayed right now on this particular version because we're testing on the new one. Just keeping you abreast of that. And let's get right into the S&Ps here. All right, so here's where we're at. Had that new profile appear yesterday. I talked about possibly looking at this from the angle of maybe we're going to explore the entire fair auction down to 23.23. That's the bottom of the box on the daily. That happens a lot of times, but we talked about trying to let this thing get back below 23.51, 50, 52. That there was a lot of congestion there, and that acted as support yesterday. And things are moving at light speed with the administration. The markets love it. If you hadn't realized this, one of the MOs was regulatory overhanging blah, and trying to dismantle that. That was one of the MOs of getting elected for Trump, obviously. And I think he hired somebody as the head of the EPA, who had actually sued the EPA 8 times as a part of the Oklahoma, I believe he was in Oklahoma, establishment out there. So you know that guy is not a huge fan of the EPA. So now he's heading the EPA, and markets will probably like that. I mean, there's got to be some regulation, obviously. The Clean Water Act and the Clean Air Act. It's nice to be able to go turn on your faucet and drink water out of the state and city public water system, of course. But trying to turn this all back over to the states, I think, is a Republican MO in general, and I think Trump's going to kind of press the gas pedal on that scene. So trying to deregulate a lot of things, not over deregulate, but just, some of the tree huggers have their place, but some of the stuff out there was a little bit over the top. And businesses, California in particular, you can't dig a hole there, it seems like, without getting a permit. Okay. I am stopping talking about that. All right, going back to the S&P. So the MO for this would be to let it get back down below 23.50, 51, 52. There's a lot of reasons why I'm saying those three numbers. I'll show you in a second. But a daily close back down below here would kind of give that reverse back in the box action, and then that would be really cool. And I think we could see some lower numbers right now. I think we're a little overextended. It's hard for me to buy support up here, even though, we hadn't really had anything to play defense against in a long time to even buy this. That was that indication within the scanner also that you would have a new profile appear. But right now, not exactly very attractive to try to play defense and short this. Here's that top of the profile in the 240s we talked about yesterday. There's 23.50. That was 23.51.50. We also had, and here's our 60-minute. Here we go. This is what this looks like. So the only thing I can say right now is you've got some resistance at 23.59. You've got some support at 23.50, 51. Those are the big numbers. Anytime you're playing around in between there, I think you have no edge, and you definitely don't have the best areas to play defense. Crude, we've talked about this a little bit, And let me go back down to my continuous contract here. Let me switch to the correct month. All right, let's take a look at April. Let me change this. I've been pretty bullish on oil in general. We talked yesterday about targets being met around 50. Well, in the March contract, a different number, but since we're in April, here's 55.06. Just met it to the T there and backed off. So, talked about at least taking something off the table there, but really not getting in the short camp. That's where I think you've really got no edge whatsoever based on what's been happening lately, especially with the dollar. We're going to hit the dollar in just a little bit. But here's gold. I mean, this is trade of the year really right now to me. Just loving this action right now. Talked about the best case scenario was $1 to rally, and this thing just kind of spin around weekly on for highs. Tell your favorite relative about this trade. I think this is one that could work out extremely well, and we could see 1,300 easily. You're going to have, with all the things going on, people making more money, the whole 9 yards, you're going to see inflation more than likely. Gold is kind of forecasting that a little bit. Here's the 30-year. We talked about this one being a really good trade on the books now. And let me get the weekly up here. So Tom and I were talking about, some things that were just looking relatively attractive by taking that relative stance along with some other instruments, kind of dumping ultimately back into the treasury trade. This is still a great situation. I think on the long side, you've had the market move up tremendously, and the notes and the bonds have just sat still. You do have some Fed minutes coming out today. There's no question about that. But nothing really seems to want to break this particular instrument or the 10-year down. And when that happens, and then you get some market help on the downside, if that ever happens, by the way, these things could move up significantly. And the 30-year would have 152.26 and then 156 as the top of the box on the daily and the top of the box on the weekly. And if you were hoping that Larry Pesavento was going to be able to do a show today, I think he's saying he might, which is awesome for all of us. Larry had laryngitis yesterday, if you guys are listening and not in the den. Here we go. You're not doing the show. Daggone it. We're robbed again. We'll be right back, folks.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi guys, welcome back to the show. And Larry is not going to do a show that really, I don't know if I can say this word. That sucks. I love listening to Larry. I know you guys do too. We're in the scanner right now. Let me hit the dollar really quick on the e-signal charts. All right. So, man, you got a feeling that, Trump could say something. He's been a big fan of saying that the other countries of the world are playing around with their currencies, and that doesn't bode well for us in some respects. And it's almost like this thing may, gap down 300 pips one day and just keep sailing south. Some kind of new statement. But right now, the technical damage is just not there on the short side. And I was thinking we're going to start rolling over and retesting some of these lower numbers. That hasn't happened yet. But the good news is this. We had a daily close. This is our daily. We had a daily close above profiles. And then we kind of had a retest of that this morning. But just like the Apple trade that I didn't get the close back in the box at 114.72. I remember it like yesterday, and the number. It just didn't happen. So what it did for me was kept me from continually building up a massive short and getting crushed on Apple. I just left it alone. And that's kind of the case for the dollar. When this happens, the statement really is, I have to tell myself, is it okay to be long, not okay to be short? Is there any reason to be short? Is there a place to play defense? And the answer to that question right now is no. So again, trading is being nimble, taking what the market will give you, being patient, sometimes waiting for the market to come to you. And right now, the dollar, this is the long-term picture on the dollar, and got a little bit of a trading bounce, but I didn't catch a lot of the rest of this move up. And right now, we've got to start seeing some other technical indicators to look at the dollar from the short side, and being able to be nimble on our feet as a trader is the name of the game. So, all right, here we go. Here we go. All right. So, we've got some pretty overextended situations in the S&Ps. That's why I'm, thinking that if any, who knows if anybody even wants to take anything off the table with this move up, because they are foreshadowing even better comments moving forward. So that's the case fundamentally, but right now, technically, we've got some pretty overextended situations that I don't see, but very rarely. We're above 60% on the stocks trading above profiles on the S&P on the daily. That's a pretty big number. So it's really difficult to buy this thing up here. Haven't talked about even shorting it until recently when that new profile came out on the daily we spoke about. And then you've still got to have some certain conditions happen to get happy feet about that. Right now, there have been some decent these are the breakdowns right now. There's two. There have been some decent little areas if you're trying to short the market to try to dive into some underlying instruments that may be showing themselves early as not the greatest candidates to be long. Therefore, if the market comes off, the story, they may come off quicker than or they may be painless if the market keeps going up, put it that way. That's the theory. But right now in the scanner, there's two stocks in the breakdown mode. And Equinix, there you have it, showing some technical damage again there. And there's the weekly, there's the daily. There's the close yesterday. Wow. Let's take a look at this one. ProLogic. And this one doesn't even look, this one actually looks pretty good. But and we're adjusting the weeklies there because we're piling everything to this new build of this. So apologize for the weeklies not looking great there. But one of the things that you can also look at is downtrend resistance. Let's take a look at really quick. I was looking at this one yesterday. Baker Hughes. And this one's already kind of sailed past more than the breakout mode. This is an all stock, obviously. This one, if you're looking for something that just seemingly is on the edge of the cliff, forget double, triple, quadruple bottoms, all that kind of jazz. All kind of looking like it's on the launching pad. You could have some decent, not pairs trades, trying to bring things back to that mean reversion type technique, but getting long some strong old stocks and getting short some weak ones. And this one, I don't think you can ask for anything better looking than an apprehensive situation like that. Let's go look at the oil sector really quick while I'm thinking about it, and then we'll come back to downtrend resistance. Here's the oil sector. There's Baker Hughes. And let's look at the XLE really quick before we start on some decent charts here. All right, so here's the XLE. Here's the long-term weekly. That's the drill there. Again, I really like crude oil to go up, actually. And anytime the dollar comes off, it may just kind of clarify that concept. But here's the daily on the XLE. You've got support at 72.24. I actually think that's going to hold. And I think we could go back and get back above 73.87 on that weekly unfair high. But let's look at BHI here on some decent charts. Here's the latest moves in BHI. So your targets on that breakdown would be 56.47. I know that's only about 4 points below. But if oil breaks down, the stocks that are going to get hit the quickest are some of the stocks that are showing some really apprehensive situations like that. There's quite a few in here, actually. Let's look at this one. Yeah, that's not good. Let's go back to downtrend resistance. All right, so a couple other, like looking across the S&P 500, and let's just take a look at some some stocks in this area. Coach. Well, it's been drifting up. I'm not a big fan of this company, but right now, let's look at COH here. Let's take a look at it. Yeah, I kind of like this one. It's kind of market's kind of come to you here on the short side, 38.86. Might have a chance to play defense on this one. And trading 38.67 this morning. We'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. And I think we've got Victor on the phone. Victor, you there? Oh, he dropped. I think he wanted me to look at FCX here, so I'm going to pull it up. Okay, so here's the long-term weekly on FCX, showing it in the den right now. Looks like it closed at around 14 yesterday, and some change, down a little bit this morning. Here's the... Okay, Victor's back. Victor, you there?
Yeah, I'm here. I was just wondering, is it going to close those 2 gaps? Should I wait until like $12? It seems like it might be.
Yeah. How
Heavy
I'm not-
volume yesterday.
Yeah. I mean, I think you could probably pick this up a little lower. It's kind of in no man's land right now. It's
Is
just
that having to do with the Aussie dollar or something? I heard it's based on some dollar, like overseas.
you know I'm not super familiar with FCX. Tom probably could call that a little bit better, but let me look at the Aussie dollar.
Just let me know what should I do. Wait until it closes those gaps because you had 60 million. You had a heavy duty volume there, and it's right where those gaps were. And I think
I'm glad you actually asked that question because if a stock is in no man's land like that, there's no really good risk reward situation, in my opinion, and there's no way to play defense relative to what I look at. Don't think that that's the only instrument out there in the globe to trade. Try to find something that you can gain some edge on. And I was showing there's the Aussie dollar right now. I've been a big fan of this continuing to climb, and I think 80 is pretty much in order on this particular currency. So if that helps, I'm not exactly sure how FCX relates to that. Myself, I don't look at FCX that often. But if that helps, I think the Aussie dollar is kind of on the launching pad here on the daily to make another leg up. So if that's a detrimental situation to FCX, then I would wait.
Yeah, I don't know what they trade in FCX, dollars or Aussie dollars. I don't know. It's taking a big pounding yesterday. No, that's a lot of volume. That's a big candlestick there.
Well, I personally think gold's on the launching pad, and I think Aussie dollar's on the launching pad right now too. So I think you got maybe better things to look at than FCX because FCX hasn't really.
Where do you think that can go? How low do you think it can go?
Let me pull that back up. I mean, I think 12.5 could easily happen.
Yeah, that's what I'm going to wait.
Okay. Well, but what I was saying earlier, trying to kind of laser in on something, and just like the euro, I was just a little bit of somewhat of a trading lesson here. It has gone past some support areas that we were talking about. I was thinking the dollar was going to come back and the euro's kind of got that inverse relationship. But, don't think that you're going to kind of, personally change things with an instrument. Don't get too glued into something like, oh, wow, it stung me one time. I'm going to show it back. I'm going to show the FCXs of the world or the euro. Here's the euro situation here. And we talked yesterday about all bets are off. It's not along anymore right now. And that's the situation.
I got a question.
Go ahead.
How long can this market stay overextended for? Just realized they made a .com bubble. Until March, you think? April? Like, how long can this bubble go? Or is it going to go on until next year? It got to pop.
Well, everybody's just relieved, I think, in the business world, and then anybody who's trading stocks or an investor is kind of in the business world. It's just a collusion of happiness, really, because, you've got somebody who's a business-minded guy who has been known to take on some risk, by the way. So some of the things that, maybe in the hopper, maybe a little too.
You got a lot of things happening. In March, he's going to have to double the deficit in order to do what he wants to do. He hasn't done a thing. In reality, starting to fade in. These shovel-ready projects are going to take a year and a half to even do if he even gets it done. Same thing Obama running on. I'm saying he's a great guy and all that, but I don't see any changes, and I see earnings. The only way their earnings got tightened up is they bought back shares with all that quantitative easing. This is just a big bubble. It's going to be like the .com bubble. And how long do you think it can go? It's going to pop. Every 7 years, the market pops. Either that or we're going to go to war or something like that. And the market, you'll wake up one morning. You know what I mean? Something's out there.
Well, like I said, he's a little boisterous about things, and some comments could. The new tax situation may be unsettling for the markets. You never know. Once it comes out, you go, wow, and then the propeller heads start getting on the calculator, and then some new numbers come out. And
he was supposed to announce it yesterday. I heard that it's better off he doesn't announce it. The market will keep on going up. He didn't announce anything.
Yeah. Well, again, like when he comes out with something, the markets, again, the propeller heads, like I said before, we get out the calculator, and then the markets will have to kind of assess what that actually means for a moving forward type stance. But I mean, everybody's just so relieved, I think, right now that, you know, there's some guy that might be in there kind of ungluing some of the mess in Washington to allow, you know, capitalism to really flourish. And that's the euphoria right now.
I'm just afraid if he raises interest rates a quarter point, that's going to kill businesses across rates and all that. They're going to have to pay more interest on everything and all that.
Do I think people are over euphoric right now? I actually do believe that because, you know, this is a process and there is something called a Congress, and a lot of these things will have to kind of, you know,
get approved.
There's a lot of Republicans, you know, that aren't going along with some of these things that are on the table right now. John McCain seems to be the anti on everything, and he's got a faction up there, and
he should be gone, though. He's anti-American, that guy. No, he should be gone. He's a bad guy.
Well,
him and Pelosi, you know what I mean? They should be in jail.
Yeah, I don't know what kind of attitude I'd have if I had done 5 or 6 years in a Vietnam, you know, POW camp.
Yeah,
so
but he's getting paid off by people and all that. He's sort of like a George Soros. I wouldn't pay attention to him.
I don't know. He's just got a different perspective on some things, and I think
he married a very rich lady in the Heinz family. You know what I mean?
Well, I think he's a true American, no matter what. Well, Victor, look, thanks for calling in, man.
All right, have a good day. Bye.
Okay, buddy. Thanks. All right, here we go. So, the bottom line is I forgot where we left this S&P talk, but you know, for me, it's a little overextended right now. I can't seem to bring myself to buy it anymore. I mean, we do have a profile here that I think the trading opportunity is to let this thing, you know, if you miss the trade, you miss the trade. There's other great opportunities in the marketplace out there all the time. And again, having this market move up like this really clarifies some stocks that just are, you know, pieces of crap that you may be able to short a lot easier instead of trying to play around with fire up here. But getting that reversal back into that 2350, 150 area and a stake in the ground on the daily close, that would be just incredibly good for a trading opportunity on the short side. All right, guys, we'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Hi guys, welcome back to the show, and let's take a look at Macy's here really quick. Let me get the right time frame up. Here we go. All right, so save that page. So here's the deal in Macy's, and I know this, like, wow, there's so many volatile stocks out there. The Teslas of the world, Amazons, Apples, all those, much more interesting to trade. Macy's, I love this action right here. Obviously, it's not in the sector that's doing well, which is great. 32.67 weekly unfair highs. Closed back in the box really 3 times here, and that's usually death. 29.93 is the other side of the profile on the weekly. Here's the daily. Can't seem to really break out. I think you've got a decent little trade here. Possibility. Stops above 32.67, targets 29.93. I know it's only 2 or 3 points, but again, it might be that painless situation if the market comes off some, or if it doesn't, it won't hurt you. But if the market comes off, theoretically, these are the type of scenarios that could be relatively attractive on the short side. Let's look at the currency again. I want to hit the euro. And we're going to, we talked, I think last week when I was talking to Tom, and I'm going to be talking to him on his show again today, we had talked about, what are the best scenarios out there right now. The Treasury trade has been a great catch a bid in that market, has been showing itself very well. We talked about that earlier, market flying, and Treasury's kind of going sideways and dollar moving up, Treasury's going sideways. It's kind of a pop scenario, like relief. And I understand that they could pull the rug out from the Treasuries at any point, but right now it's looking, and it has been looking relatively attractive. And I haven't talked about being long Treasuries in a while, but you've got some upside targets on that market, I think, that look pretty good. And a really cool setup on a relative scale, how it reacts to different global instruments. Here's the euro. So I talked about kind of a support area to try to use to try to get long this. I'm just going to review this again. 105.85, 86 was kind of, that's the bottom of the profile on the weekly, and that's what I was looking to play defense against. And there's the weekly. Here's the daily. So it kind of broke down, and then we've kind of gone back and retested that and started to sail south. And yesterday we talked about all bets are off on this thing now. On the long side, just take the medicine, and don't think that, I'm going to show the euro. It stopped me out, get bullheaded about the thing. It's just not in a situation right now where it's time to catch the bottom here on the euro. I mean, the dollar again, that's kind of clean and clear technically of some things now on the upside. It may move north more so, but in my opinion, until the dollar, I'm going to show you this again. Let me go back to the dollar. Until the dollar starts at least reversing back below 101.19, 101.20 and dives back in the box, the euro at that point more than likely would have traversed back above that 105.80, 105.60, 105.80. That's that inverse relationship situation. But both of these things need to happen to get happy about being long the euro again. And I understand, you guys have been reading the news about some of the economic reports coming out of Europe. Let's just kind of keep our eye on the dollar for that particular trade also. The pound, I've talked about not really seeing a lot of edge here, so I'm still going to stand by that. Aussie dollar, you guys know, I talked earlier about, I think that's the trade looking extremely ready to be getting off the launching pad again and probably heading to 80. Feel good about that one. Let's take a look at, we looked at Macy's. They had some news out yesterday. Let's take a look at a couple of the stocks that were in the news. Good old Walmart. All right, so looks like we're printing this morning around 72. Obviously, I'm not a big fan of trading before earnings announcements. Here's Walmart now. So support on Walmart, 69.98. Let's just call it 70. I wouldn't walk in this morning and just start clamoring to buy it. The market's overextended and Walmart's gapping up. So again, you'd have to wait and let this thing come down to 70 to even look at it from the long side. Let's take a look at Coca-Cola. All right, so Coke getting a little bounce here off the bottom, that 40.51. We were really hoping that we could get a weekly close below there. We talked about, looking at this from the short side only. It's right in the middle of a fair auction on the weekly now. But we talked about trying to lever off any chances you get to short this thing. That's the weekly situation. This is the daily. So, pretty big move up there and then use profile below price action. So this thing may climb a little bit more. You don't have a lot of edge to look at this playing defense right now. So it's kind of leave it alone right now. Home Depot. Been a huge fan of this one. If you guys have been watching the show, this has just been an all-out long for a while and really don't see any reason to get out of the trade. There's, I love the way it closed yesterday. It's trading 145.20 this morning, and there's no new profiles attempting to appear or anything. So long-term investors on Home Depot, I think you're still good there. Let's look at FSLR. Oh, and here's a pretty good picture of, you guys should get this in your hands quickly now. Everything very easy. This is Chinese stocks, I believe, or Hong Kong stocks. Kind of new look and feel, and has a beta component in there too. FSLR, 35.72. Is that a real print this morning? Yep. All right. So, I actually like this trade a lot right now. Here's the 35.75 support on it. This is obviously what happened yesterday, but I know we've had a fake out before breaking above profiles, but keep your eye on this one. There's the bottom of the profile, 30.03 down below, caught a little bit of a move there. If we can get a weekly close just to stay above 35.75, I actually think you can use that to play defense for this to move higher. That's FSLR. Let's take a look at Medtronic. Okay, so let's see here. New stock from yesterday. Not printing yet this morning. We'll take a look at this when we come back, folks.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Crude oil, just revisiting a couple of things. This is why we always talk about taking some off the table when you reach inflection points. I've been pretty long-minded on crude, and talked about yesterday in a different contract, April, pretty much same thing. 55.06 now coming off. Still love it from the long side. God, if the dollar could come off at all, this would possibly make a decent move here. Gold, man, the writing seems to be on the wall with this. That 1236 area had a close above last week, just doesn't want to come off here, and just looking super attractive. Here's top of the profiles on the daily. You got that headwind at 1241. So getting clean and clear of both of those inflection points, I think you're just going to have a ether situation. I mean, just the thing was just going to move up on probably no volume, just lift. It's going to be nice to see that happen. Wanted to bring up Tesla here. This is a great example. Stock's just been on a tear. Shorts just getting murdered here. And here's the daily. We talked about, new profile. Okay, can take some off the table. Let's look for new support. Zero reasons to short this thing. Again, it's just turn the rents the same way. Support was offered 262.44. I think we reached the low of, what was that? I cannot read this thing. Here we go. 264. Got close to it anyway. A little bit of resistance at 284.27. My God, that's killing some people. Here we go. Amazon. God bless the shorts on that one, man. Whew. All right, so we talked about this one. I mean, this is a full-blown true monopoly, and there's been other companies labeled as a monopoly, and actually government stepped in and stopped them, doing much less than this company's got his head wrapped around. 847.21 unfair highs on the weekly. Now we've surpassed that. Talked about not shorting it, but maybe the play on this one would be to buy some lottery tickets well below. I mean, super cheap, just in case something like that ever happens. Because when this thing comes unglued, it's really going to come unglued. I mean, it could get cut in half or way less than that, based on, Bezos owning the Washington Post, Trump's favorite newspaper out there. Here's the Shanghai. It was CSI 300. Talked about the targets on this one, 35.21. Still a big believer in that one. And there was that breakout again above dailies. Dailies regulating that weekly trade up. All right. Let's hit Apple really quick. All right, so here's Apple. Heck of a day yesterday again. Support on the new profile yesterday. This is kind of where we're at, though. 134.21 bottom of the profile. That's support on it, kind of like the Tesla situation. Just got to kind of be patient on this one right now. And we're going to show silver really quick. Silver looking good too, just like gold. Love it. Support at 1768 on silver. Guys, we'll be back again tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.